Hello， 大家好，我是阿方，欢迎来到我频道。大家知道我是一个比特币的囤币者，但这个世界上跟我做同样的事情当中，有一个非常传奇的人物，他叫 Michael Saylor。那他到底为什么传奇呢？因为他是目前全球第一个敢把自己公司的全部资产几乎都换成比特币的人，而且不是一点点，是上百亿美金。华尔街说看懂了 Michael Saylor， 那么你就看懂了机构时代的比特币。他不是币圈的 KOL， 但是一定是比特币的 KOL。他不是投机者。他是美国上市公司的 CEO，SEC 监管下的企业经营者，全球最大比特币持仓公司 MicroStrategy 创始人，超过600亿美金的比特币储备的管理者。更关键的是，他应该是第一个将比特币带入华尔街的人。他的行动让银行改变了态度， ETF 加速了通过，很多国家的政策因他而改变，机构正式进场。所以他是将比特币带入主流世界的关键人物之一。这次位于杜拜的币安2025年区块链周，他有一个非常关键的演讲。那么这次演讲他到底讲了什么？总结一句话就是，比特币不只是数字资产，它正在成为数字时代的资本，而资本会自然产生一个新的数字信用。这两个词是这一次演讲的核心。Saylor 的意思很简单，过去的资本是什么？是黄金、美元、国债、房地产、股票，而这些资产共同的缺点是不够透明、不够全球、不够自由，不够抗通胀。而比特币是第一次做到了全球统一市场，无国家控制，并且是靠能量驱动的，供应是固定的，流动性极强，任何人都能自由拥有。所以比特币不是投机品，而是全球金融系统正在推出的底层资本。这就是 Saylor 口中的 Digital Capital。 那么什么是 Digital Credit？ 那这个词英文的直译是数字信用，但是这里我更愿意把它翻译成数字固定收益。Digital Credit 的出现是为了一个现实的矛盾，比特币长期强，但不生息不派息，很多人想参与，但是怕被动，又需要现金流，所以 Digital Credit 就出现了，就是用比特币当发动机，创造稳定的现金流。简单的说，想要长期的资产，那你就持有比特币，但是你想每个月领钱，有一定固定的现金流，那就用 Digital Credit。 所以它不是比特币，它是一个金融的产品。例如 Michael 说的STRC， 它是稳定的每月发息，还有一个是 Stride， 是 STRD， 它是高收益型的，还有 Strive， 它是这个体系当中最安全的优先级债，还有 Stream， 那这个是一个欧元的版本。这些都不是代币，它是结构化固定的收益证券。我知道大家最关心的问题是，Michael 这样 all in 比特币，那如果比特币跌了，跌去 50%， 那他所承诺的这个利息还能发吗？像刚才说的 Stride， 它是高收益的，但是如果本身比特币的币价再跌的话，那么这个收益是可以调整的。所以答案是能发，但是利率会调整。原因是 Strategy 的这个模型当中，它的固定收益并不是由币价涨幅所带来的，也不是靠卖币来产生利息，利息是来自这个模型当中公司融资的规模、公司融资的结构、利差，还有衍生品的策略、产品的交易量，还有公司美元的储备。那刚刚前2天比特币从12万跌到8万多的时候，很多人说 Strategy 要开始卖币了，但是没成想他发布了一个重磅消息，他说他们筹集了144亿美金的燃料库，它足以可以撑过21个月。所以比特币是发动机，不是油箱，只要发动机不坏，车就能够跑得动，只是速度变慢了而已。只有一种情况固定收益会出现很大的问题，那就是比特币进入长达10年的死亡趋势，那也代表着全产业链的失败。但是那个时候就不是固定收益产品的问题了，而是整个比特币文明的问题。Michael 在台上说了这么多，那到底普通人能不能参与？怎么参与？老实说，目前绝大多数散户还不能够直接购买数字信用这个产品，因为它属于受监管的合格投资者的产品，要通过银行、证券、私募渠道，还没有全面开放散户入口。但是 Saylor 说未来一定会开放，因为它设计的目标就是成为全球散户可以买的数字利息系统，就是数字信用系统，就像比特币的 ETF 一样。他说这只是时间问题。那么作为普通人，我们现在到底怎么样可以参与？他给了3条路，第一条就是最稳健的，你买比特币就可以了，你真实的自己持有比特币，那这个是长期主义的基石，也就是我现在做的事情。那未来能带数字固定收益开放给散户，那这个是下一轮的金融革命。反而令我最惊讶的是，他说第3种是最高风险的，就购买他们公司 SMTR 的股票。我们发现它涨的时候比比特币涨得还快，而跌的时候比比特币跌得还要凶，因为这个是加了杠杆的比特币。 我个人认为并不适合大多数人。但如果你想试一下，首先你要有一个可以购买美国股票的账户。那目前我是采用富途牛牛去购买 MSTR、特斯拉、英伟达、苹果的。那如果你也想了解一下怎么购买美股，你可以看一下这个影片，我也会将链接地址放在评论描述区。那现在开户，说不定还有美股可以送。所以看完整个 Saylor 的演讲，你会发现他讲的不是产品，不是收益，而是一个方向，那就是未来资本一定会数字化，未来的利息也会数字化，未来的金融体系将围绕比特币重新设计一次。而我们能做的也很简单，就是站在趋势正确的一边。建议你理解一下我刚才所说的这个框架，然后如果你还有一定时间，你可以看一下影片后半部分 Michael Saylor 中英文的完整版本。看完这个影片之后，我想大家思考几个问题。第一个是，你认为比特币未来的10年收益会是多少？ A 负增长， B 大于 20%， C 呢大于 100%， D 拥有10倍以上的收益。第二个问题，你是更想持有比特币，还是今天 Michael 说的数字固定收益的数字信用，还是 C 两者我都想要？最后一个问题，你最担心这类产品的风险是什么？欢迎在评论区说出你的想法。好，那我们就看一看 Michael Saylor 到底说了什么。再次重申一下，我的影片仅仅是我在区块链领域学习记录分享，不能做你任何的投资建议。
Thank you for having me. I'm delighted. This is my first time at Binance Blockchain Week. Impressive, very excited. You know, I see a lot of yellow. I guess today's an orange and yellow day. Thank you for hosting the orange. I'd like to share what I see as probably the most exciting development of the past year, which is the worldwide embrace of digital capital, digital currency, digital finance, and digital credit. And Binance is a big part of it. Everybody in this room is a big part of it. And I'm going to share my perspective on it. And I thought I'd start just by observing. By the way, there's supposed to be a timer here. The timer's wrong. Could you? It says I have 12 hours and 40 minutes. Yeah, you guys are in trouble. I could actually fill the 12 hours and 40 minutes. Let's start with an observation. There's a revolution in the capital markets going on. And that revolution is impacting the capital markets for currency globally. It's impacting the capital markets for equity. It's impacting the capital markets for credit. It's impacting the derivatives capital markets. And the basis of a lot of this starts with Bitcoin. And it starts with the embrace of Bitcoin by the global financial community. So Bitcoin is emerging as digital capital. And why is it digital capital? Because the President of the United States, Donald Trump, has styled himself the Bitcoin president. He's declared he wants to make the United States the crypto capital of the world. He's decided he wants to lead in digital innovation, whether it's digital assets, digital capital, digital finance, or digital intelligence. And you can see that it's not just rhetoric, because he's appointed a cabinet, and that cabinet consists of an incredible array of digital advocates. The Vice President of the United States is an advocate. The Secretary of the Treasury, Scott Bessent, is an advocate. The head of the SEC, Paul Atkins, is an advocate. And not just the financial regulators, you also have non-financial regulators like Tulsi Gabbard, Kelly Loeffler, Robert F. Kennedy, even the head of the FBI or the head of Commerce. You've got an unprecedented support for this asset class across those people running the entire government of the United States. And this is a big deal. We've come a long way in 12 months. The second thing that's happening is that for Bitcoin to emerge as digital capital, you need the banking industry of the world and the banking establishment to embrace it. And they were fairly hostile to the entire crypto industry until about a year ago. And even a year ago, with the change in administration, there was uncertainty as to whether or not the banking regulators would actually make good on the campaign promises of the Trump campaign. And what we've seen is there's been a series of announcements by Treasury, by the OCC, by the FDIC, by the Federal Reserve, and even joint bulletins from all those financial regulators. The sum total of them to say crypto is good, Bitcoin is good, it's okay to bank it, it's okay to lend against it, it's okay to custody it. We know that the previous administration punished banks that engaged in crypto activities. We're not like them. There's a 180-degree sea change. So banks are the most bureaucratic, risk-averse institutions in the world for good reason. You would think that from the point that the tone at the top changed 180 degrees, it might take a bit of time. I mean, for all the banks in the world to embrace crypto, to embrace Bitcoin, in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank, and now if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending, and they've all flipped their stance in the last 6 months. So this is a major change. Wall Street's embraced Bitcoin as collateral, as capital. We were the first company that was publicly traded with a substantial holding of any crypto asset, and the first company with Bitcoin on the balance sheet. Then there were a dozen, and then there were 2 dozen, and then there were 60, and now there's a lot more than that. When we started doing it, there were no ETFs. And you can see that the first ETF was approved January of 2024. There's 85 worldwide. And of course, the most successful ETF in the history of the world is BlackRock's IBIT ETF. So you can see that Bitcoin has exploded through all of the fund business. It has exploded and been embraced through hundreds of publicly traded companies. I mean, to think we've gone from just a handful to more than 200 in 12 months is just an extraordinary move. Bitcoin is the economic foundation, the ethical foundation, and the technical foundation of this entire market. If you consider why, it's because it has the most power. It has the most electrical power, 24 gigawatts. That's 24 full-on nuclear reactors. That's more energy than drives the US Navy. It has more computer power, more than 1,000 exahash. That's more power than all the data centers that Microsoft and Google could muster together. It's got more trading power. There are 1,000 exchanges. Anybody can trade this anywhere in the world. Anybody can custody this anywhere in the world. Anybody can transfer this asset anywhere in the world. It's got more political power, right? We've got hundreds of millions of crypto enthusiasts. We've got hundreds of millions of Bitcoin holders. 30% of the registered voters in the United States are pro-crypto. It's got more economic power. More than $1 trillion has been invested in this network. $1 trillion of real capital. My company has spent something like $48 billion to acquire 3.1% And so if you basically take 3.1% to a 48 billion and you scale that out, you see how much real money is flowing into this network. So the first big idea is you now have digital capital, a store of value. But that's just the beginning. That is the basis of an entire digital finance and digital credit industry. And all of these companies capitalizing on this can do lots of different things. You can rethink insurance, you can rethink banking, you can rethink trading, you can rethink all sorts of finance. We have focused upon rethinking credit, and so we are the first digital treasury company. What do? We created a capital balance, about 650,000 Bitcoin as of now, and we've acquired that consistently over the past 5 years. We're acquiring a huge amount of capital because we want to use it to create an extraordinary new kind of credit. Right now, we're the 5th largest treasury in the S&P 500. We're climbing our way. I think we'll be number 2 in the next couple of years. And in 4 to 8 years, we expect to be number 1. And we're doing that because we are positively polarized to capital. If you look at this chart tells a story, which is every company on Earth, if it's conventional, is capitalized on money markets. The money markets return about 3% a year. That's the conventional finance strategy. But if you were to capitalize on Bitcoin, you'd be returning 47% a year. It doesn't take a rocket scientist to see that if the cost of capital or the hurdle rate is 14%, that's the S&P index, then any company capitalized on money markets is destroying shareholder value as they accumulate capital. But any company capitalized on Bitcoin is increasing or creating shareholder value. So when I say we're positively polarized, what I mean is every company that capitalizes on digital capital can raise more money and get more powerful forever. And they're competing against companies that are capitalized on fiat currency or conventional money markets that are getting weaker the more capital they carry on their balance sheet. So conventional wisdom is decapitalizing companies. Digital wisdom is recapitalizing companies. The secret to our success is we simply raise capital at the cost of credit, 6 to 12%, or the cost of equity, 14%. And then we buy something appreciating 47%, and that's how you get to a 65% return. We raised $22 billion of capital last year. We've raised $22 billion of capital this year. And so all of that money is flowing into the crypto economy. And we have raised capital a variety of different ways. You can see it was $16 billion of equity last year and $13 billion of equity so far this year. But we're also drawing in capital via digital credit, about $7 billion of digital credit, these public instruments like Stripe, Strike, Stride, Stretch, etc. And then also traditional debt. The company's mission is to increase Bitcoin per share. So people that are hyper Bitcoin maximalists that want more Bitcoin would buy our equity because every year we're increasing the Bitcoin per share. If you want to just buy the underlying asset, you buy the ETF because that's equal Bitcoin per share. This is a snapshot of our capital structure. Right now, about $60 billion of BTC reserves against about $8 billion in debt. So it's a fairly low leverage ratio. We have about 73 years worth of dividends. The company pays out $800 million of dividends a year. For us to pay that money forever and grow shareholder value, Bitcoin would have to appreciate 1.36% a year. That's the cruise speed. So when you think about what our bet is that Bitcoin will appreciate more than 1.36% a year. If it does, we win. It's just that, by the way, the equity wins. If it doesn't, then the equity isn't a good investment. What we did this week was we raised a $1.44 billion US dollar reserve, and that gives us 21 months of dividends. We did that so that we could pay the dividends without selling equity or BTC derivatives or BTC if none of those capital markets were open to us. You could think of it as we can hold our breath for 21 months. Like if the market is irrational or closed for 21 months, we can just pay out of this reserve. It's like a battery. And so the company's strategy is when our equity is trading above the net asset value of the Bitcoin, we just sell the equity. It creates shareholder value. And when the equity is trading below the value of the Bitcoin, we would either sell Bitcoin derivatives or we would just sell the Bitcoin. You could think of it as, here you have a spaceship. What is our goal? Our goal, by the way, is to create the best digital credit. Our goal is to provide you with a bank account that pays you 10% instead of your bank that pays you 4 or 3 or 2 or 0. That's what STRC is. So that's our goal. The way we do it is we have a Bitcoin reactor, a crypto reactor in the middle of the company. It's charging a battery. The battery is a US dollar battery. The battery is for short term. The reactor should presumably, if Bitcoin appreciates 1.3% a year, the battery runs forever, or the crypto reactor runs forever, right? If Bitcoin appreciates 0, then the reactor runs for 73 years. And then we just fuel the entire machine either in the equity capital markets or the BTC market or the BTC derivatives market. I'm going to skip this in the interest of time. Important point I'll make here is we have a credit model. It's on our website. We update it every 15 seconds. You can pretty much plug in any assumption you want about Bitcoin and volatility and ARR, and you'll get out the risk. We just got rated by the S&P. Our goal is to be the first investment grade Bitcoin holder and the first investment grade crypto company where we can issue investment grade debt. We have to start at the bottom and crawl our way up. So we start with a B rating or a B minus rating from the S&P. We got this before we raised the $1.4 billion of reserves. Hopefully we'll get upgraded over time. But what that did do is it allows us to sell credit to an entire class of credit investors that have to have a rating. So it tripled the capital market for our credit when we got that rating. So that was a good thing. What is the company doing? We're transforming capital to credit. You have a 5-year-old kid. You can give them an acre of land in New York City. That's capital. And you can say, in 10 to 30 years, you can either sell this land or you can refinance this land. And in the meantime, there's no cash flow. That's a capital investor. On the other hand, you can also give the kid an annuity. This is an annuity and it pays you $10,000 a month forever. That's credit. If you want to give the kid $10,000 a month forever, you give them a credit instrument. If you want to give them the ability to get rich in 30 years, you give them the capital. Bitcoin is capital. It's volatile. It's high performance. There's a lot of people that don't want it. The world is built on capital, but the world runs on credit. And so in order to convert capital into credit, you take BTC currency and you make it USD or you make it euros, or we could create JPY. You strip the risk by over-collateralizing it. You damp the volatility by giving it a par value, a liquidation preference, and by managing, say, the dividend rate. You extract or distill the yield. You can set the yield, say, at 10% or whatever percent you want and adjust it. And then you compress the duration. The capital investor, if you own Bitcoin, I say you got to hold it for 10 years, you'll get rich. But you get no money between now and then. The credit investor is, I'm going to give you immediate gratification. I'm going to start giving you cash dividends next month, every month. Okay, there's a place for both. In fact, the average person has certain money they need to have in credit, and other money they need to have in capital. What we're doing is transforming digital capital to digital credit. And we've done it and created these various digital credit offerings. Strike is structured Bitcoin. It pays you a yield and gives you upside while you wait if you want the best of both worlds. Stride is super high yield, long duration credit. It's actually paying 12.9% effective yield right now. If what you want is max cash flow, then you would want something like this. Strife is super senior credit, so it's senior in the capital structure, has the most governance rights and liquidation preferences. It pays less. If you want investor protections, you get 9%. If you're willing to waive them, you get 12.9%. There are two different sets of investors. The investors that buy the one won't buy the other. We created both of them intentionally. Stretch is the most advanced instrument. What we did with Stretch is we wanted to create a high-yield bank account where it would hold principal around $100, very, very close to that, and then would pay out a dividend every month. In order to do that, we had to make it adjustable every month. And so this is the first example of a treasury credit instrument issued in the industry. In fact, it's the first instrument of its time ever issued in the history of the capital markets. Nobody ever created a variable rate preferred equity until we did it. The reason we were able to do it is we had digital capital. You can't do it without digital capital. We had digital intelligence. I designed this with AI. It never would have come to market if I didn't have AI, because the lawyers told us they'd never done it before. The bankers said, we've never done it before. Everybody else said, it's never been done. It can't be done. It won't be done. And I said, well, the lawyers and the bankers say it can't be done. Can it be done? The AI said, yeah, of course it can be done. It's very straightforward. Do this and this and this. And so I basically fought and then convinced. You can convince people, you just need to have a lot of intelligence on your side. So we use modern technology to develop this. I'll show you how it turns out. The fifth thing we did was Stream. We created a Euro version of Strife. So if you're a Euro investor, you don't want European currency risk. You want to be paid in euros and you want Euro par value. So we launched that about a month ago. This is Stretch for the past 5 months, or since August 1st. You can see it came out just around 90. It's up around 97 right now. We've adjusted the dividend. Now I want to show you, I'm going to show you the difference between capital and credit here. That is Stretch versus Bitcoin. If you had $100 and you bought $100 of Bitcoin on August 1st, you would have lost $27 in the past 5 months. And you get no dividends. If you had bought Stretch, you would have made $7, and you would have collected $3.70 of dividends. So you look at that and you say, well, the Stretch investors did very well. In a bear market, the credit investors outperform the capital investors. Well, why does anybody want to buy Bitcoin? Well, because Bitcoin's up 50% a year for the past 5 years, and you're only going to get 10.75% on Stretch in steady state. But you're going to have to stomach the drawdowns, the roller coaster, if you want the capital. Again, ergo, if you have a 4 to 10 year time horizon, you should take the capital. But if you need the money in 4 months, 4 weeks, 4 days, or less than 4 years, or if you're risk adverse, you should take the credit. And you can see it takes a company like ours. You need a treasury company to strip the volatility and the risk off of the capital to get to the credit. That's what we're doing. And we're doing it increasingly aggressively now. This entire digital credit category we created in January. You can see it's gone from nothing to nearly $8 billion in 9 months. You can see liquidity is off the charts. This is the trading in those digital credit instruments. And this is per day, so sometimes you're going to get 400 or 500 million in a day, or 400 million. Let me put this in perspective. The average preferred stock is listed over the counter, trades 100,000 a day. The typical public preferred stock that's successful that is taken public trades $1 million a day. The first securities we created, our first digital securities like Strife and Strike and Stride, they were 30 times more successful than that out of the box. They're trading 30 million a day. And then we finally got it right with Stretch, and we created the instrument everybody wants. It's trading 140 million a day. 100x, right? How do you know something's working? It's 100 times better. And then we stumbled on something. Necessity is the mother of invention. We stumbled upon this observation that if you actually fund the dividends by raising capital, either through equity or through the derivatives market or the BTC market, then the dividends you pay are return of capital, which means they're tax deferred, which means you don't have to pay the tax on them. And this is profound, right? We created a way to pay you dividends where the dividend tax rate is 0, not 20, not 30, not 50%. And of course, the company then sells the credit to buy the Bitcoin to create this amplification. So if you're wondering, why does the equity have value? The equity has value because we're able to create the credit. And the more credit we sell, the more BTC yield we generate, the higher the equity value will be. And so let me just break this down with a few quick observations. First, there's a revolution in credit markets. This is $300 trillion market. Why is digital credit better? Because you're building it on an appreciating asset, Bitcoin, not a depreciating asset, not a rusting warehouse or a product or a service. It's better because it's transparent, homogeneous, and continuous. We update the credit model every 15 seconds. It's not like 10,000 mortgages wrapped into a mortgage-backed security. It's not like corporate credit or sovereign credit. It's better because it's equity, not debt. Bank credit is debt. Bank deposits are debt. Corporate credit is debt. What that means is they amplify risk to the issuer. Equity mitigates the risk. It's technically impossible to go bankrupt if you're actually creating amplification with equity, because the equity never comes due and the dividends can only be paid out if they wouldn't make you go bankrupt. The perpetual nature is another big change. We'll pay you the dividend forever. How do we pay the dividend forever? We invest the money forever. We're investing the money in the crypto economy forever. We're paying the dividend forever. Every other form of corporate credit is short duration. And then we tacked on this idea of taking it public. And because we took it public, it's liquid, it's global, it's easy, it's branded. There's a word, Stretch, S-T-R-C. Anybody can buy it anywhere in the world. And we create the credit digitally. If you give me 500 million, I create 500 million of backing collateral, and I do it simultaneously before the day is over. Imagine you wanted me to create $500 million worth of buildings in a single day. You see, we're running the investment cycle in one day, and it would take a real estate company 5 years. And it would take a company years. So the speed at which you're doing this is unprecedented. And then if you do it in a treasury company with that model, it all becomes tax deferred. And so what you see here is, on the left, traditional credit can pay you 2, 3, 4%. We can pay 10 or 12. We can pay higher dividends because we have a more efficient product and we have innovations in that credit. And that's based upon our business model. What is a Bitcoin treasury company? We sell securities to acquire capital. We issue digital credit, and that's tax deferred, and then we pay the dividends tax deferred, and the capital appreciates tax deferred. It's triple tax deferred. This is the most efficient, scalable fixed income generator in the world. Like there's no other type of company in the world that can generate billions or tens or hundreds of billions of dollars of dividends tax deferred. You can't do it with oil and gas. You can't do it with real estate. You can't do it in the traditional way, selling products and services. So the breakthrough is based on digital capital and this new type of business model. You think of the company as a digital credit factory, really. We're swapping US dollar yield forever to one set of investors, and we're creating BTC yield for the equity investors. And you can do it with dollars, you can do it with euros, you could do it with yen. Ultimately, what's the result? Well, return of capital dividends give you 64% more money. They just pay you a lot more. And when you compare them to other opportunities, if you're a United States citizen, your bank's giving you 40 basis points, the money markets are giving you 400 basis points, taxable. We're giving you 10.8% in stretch. That's a tax equivalent yield of 17%. So that's 4x the money market. That's 20x what the bank wants to give you. If you live in New York City, it's a bank account that pays you 22%. Or you can collect 4% from the money market. Like, it's so much better, right, that you can't really imagine why would you want the other thing. This is Europe, right? In Europe, the money markets pay you 1.5%. Stream pays you 12.5% effective yield, but if you're getting taxed, it's almost 20%. You live in Vienna or Brussels, it's like a bank that pays you 27% interest. Think about it, right? This is the revolution. We're basically going to digitally transform the banking industry, the money market industry, the credit industry. And it's not just stretch. Every digital credit instrument is so much better than every conventional credit instrument. It's not even funny. Like, look at junk bonds. They pay you 6%, and our instruments are tax equivalent 14 to 20. Or look at private credit. It's 7. It's opaque. It's heterogeneous. And of course, look at the entire world. Stretch is a 17% tax equivalent yield. The money markets in the US are 4%. In Korea, they're 2%. In Europe, they're less than 1%. In Singapore, 1%. In Japan, 50 basis points. In Switzerland, they're negative. So when we talk about digitally transforming the world, what we're really talking about is fixing the money and fixing the banking system and fixing the credit system. And remember I said the world runs on credit? Okay, well, how are you supposed to give your kid an annuity in Switzerland or Japan when the bank's offering you nothing? Right? How do you get 10% in Swiss francs or 10% in yen? And the answer is digital credit. And all of these companies that are transforming the world, they're going to go into Japan, like Metaplanet, or Switzerland, and they're going to go into Korea, and if it's not our company, it'll be another local company. And the truth is, the world, the world wants a 10% bank account. So I'm going to make one point, right, which is, if you walk down the street and you ask 100 people, what do you want? Do you want to get 30 or 40% a year with 40 volatility? Between 1 and 5 say, yeah, I could put some of my money into that. But a lot of people are afraid. If you ask the average person, would you like a bank account that pays you 10% tax deferred? Everybody wants that. So if you're not sure what you want, you probably want something like Stretch, STRC. And if you think about the implications of this for the digital economy, what this means is that on a foundation of Bitcoin, digital capital, we're going to see digital credit spread into every single market, and it's going to fix the banking system. It's going to fix the money market system. And it's probably going to reset the cost of capital for corporate credit, private credit, other types of credit securities. The winner is the investor. The winner is the digital economy. The winner is the Bitcoin holder in the Bitcoin community. The loser is any bureaucratic, antiquated oligopoly that wants to keep your money and pay you nothing. And that's a lot of different systems everywhere in the world, but we're reforming that system to the benefit of humanity. And you're all on the journey with us, so thank you for your support.
Fantastic. Michael, thank you so much for your presentation and for sharing your insights. If we have time, I would love to just pick your brains. We have one question from the community, and I think you've explained so much on the longevity of Bitcoin and the reasonings why. We have Binance's flagship event. We have people watching from all over the world. If you had one final message to give everyone, markets are cyclical and we've seen the ups and downs of the movements, but why Bitcoin? Why now? Why always?
Yeah, my message is digital is changing the world. It's very obvious digital intelligence is going to go into your car, into your robots, into your phones. We're going to have 1 billion AIs. The cars will drive themselves. Robots going to make stuff. If you want to make stuff, do things, think about things, you got to think digitally. Digital assets are going to change the world. Digital currency, digital equity, digital credit, digital finance, digital securities. It's all digitally transforming. A very simple lesson of digital is there's nothing you can't do better digitally. If you think about the advances in digital photos and digital video and digital education and digital entertainment, the digital transformation is upon us. Right now, we're transforming capital markets, transforming banking. My message to everybody is figure out how to harness the power of digital technology to provide your good, your service, your product, your investors something better. Serve the citizens, serve your customers, serve your family, right? There's volatility in the market, there's sound and there's fury, there's skepticism. You know, there was skepticism about electricity, there's skepticism about automobiles, about airplanes. Every technology's got skepticism. People weren't even sure they liked nuclear power for the past 50 years, right? We stopped nuclear energy from 73 to 2023, and then all of a sudden they decided that infinite clean energy was probably not a bad idea again. So there's always going to be skepticism of the new, but I wouldn't get caught up. I wouldn't be afraid, or I wouldn't be cowed by the volatility. The volatility means this is the most powerful, vibrant, useful thing in the entire capital market. That's why it's volatile. And there's energy there. You can harness the energy if you're not afraid of it. Don't run away from the fire, run toward the fire. That's what I would say to everybody. If you can't handle if you can't stomach 50 vol or the volatility of the capital, then there's a simple answer, the credit. Either create the credit if you're a builder, or buy the credit if you're an investor. You can have the benefits of the crypto economy without the volatility if you buy digital credit. And if you don't want that, then you can create the credit. And if you want raw power, plug digital capital into your country, your company, your family, your product. I think it's the most extraordinary thing of our lifetime.